Hey traders and investors, it's Serge Berger here. Today I want to have a look at what's probably the most important topic in terms of performance and how the reason why I've managed to pull money out of the markets independent of directionality in the market over the years. It has to do with knowing when to be invested in the market and when not to be. In other words, when to trade and when not to trade, and when to just sort of set aside. On the institutional side, they have a similar term to this. They describe it a little bit differently, but they say that the biggest part of generating returns has to do with your asset allocation. In other words, are you invested in bonds? Are you invested in stocks? Are you invested in commodities? Or if you're, which sector and stuff like that. So to me as a trader, it's actually more important in general to know when to be invested in the market and when not at all. There's a couple things that we can do. First of all, look at the market. If it's trading in a very choppy sideways pattern as the S&P has now for some time. Of course, today, as I'm recording this, as luck would have it, the market just breaking down. But you can see it's been a very challenging trading environment ever since the beginning of June. And it got even more challenging throughout the month of July. July was an extremely difficult market environment. So when you see the market trading in a very narrow range, you can look at things like average, true range, and things like that give you an indication of the lack of volatility or directionality in the market, or it's really the lack of day-to-day volatility. Then you can look at things like the VIX, of course, but really when you look at the index, note how many of those independent or single day doji candles you see. You can see a whole bunch of them here popping out up all over the place. And then single name stocks. We've had a lot of single name stocks, particularly during the month of July, that give us a lot of breakout, fake out moves or moves that we simply could not trade. For example, and this is just we had a lot of these. Of course, we're in earnings season right now. So Twitter. I mean, yes, you could have made the bet before earnings that the stock was going to rally. You could have also made the bet that the stock's going to fall apart. At the end of the day, holding Twitter, from a trading point of view, unless you're doing an option strategy, holding the Twitter as a stock through earnings was a very difficult trade. So the entire trade, the best move the stock's made basically since early July, just happened in one day, and it's probably over, right? So the next trade we're going to get is probably going to be for some time. So it's been very difficult to trade this market from a single stock perspective, and then considering how choppy the market's been overall. So know when to stay in the market and when not to do anything at all. Right now, it's one of those periods that maybe we're just coming to the latter end of it, but I think it's very difficult for a lot of traders to just sit aside for literally more than 2 days and not do anything. The best traders I know can sit aside for multiple weeks and not do anything at all. So please keep that in mind. That's just how this business works. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.